What is up, guys? Ojere. I cannot particularly tell if my audio is clean enough. But if it is not clean enough, you go put your ear for you go put your ear for your phone, like say you listen to radio. I want to briefly teach you guys how I use sweeps. Like if I wanted to really take my time, like I won't take my time or trade, like especially if I'm considering trading lower time frame. How I use sweeps to confirm what I am supposed to do with price and all of that. That is what I want to teach you right now. And this will really help you, especially for you guys that are always interested in entering from lower time frame. You always have those are your fancy blah blah. I have that too, but I do not totally enjoy them. I just prefer trading without the much needed drama that comes with it. And mind you, I have recorded a 10 minutes video before on my phone. The audio was bad, so I had to come redo it on my computer. So let me just briefly explain what I mean by entering with sweeps. Sweeps are a concept in the trading industry that validates or consolidates the fact that price might not possibly return to that zone where you are most likely going to be putting your entry and entries in for a target. Let me explain with this. You can see in the daily time frame we have price. You obviously price is we have a bullish structure. Forget that this is a small, what do you call it, a small bearish structure now, but you know for a fact that this is price is in a bullish structure, right? Kini, what is this? What is this? Oh, okay. Price in a bullish structure, right? And even in a bullish structure, there are instances where you can see catch some sales, right? So, but what I am explaining now is how to be pro trend, to follow the trend, to be able to catch those trends, those movements that that we ought to catch. Are they come? Jesus is Lord. My laptop tripped my. You guys should forgive me. My drama is too much once in a while like that. I they wonder why the thing they. Okay, sorry about that. So, according to this structure that we can see here, we can see price giving us a bullish structure, a bullish structure, a bullish structure. Bullish, if you are new here, means buys, right? That is what it means. So we've established that in 1 day in daily time frame, and we are now going to enter our 4 hours. Now, in 4 hours, what are we paying attention to? We are paying attention to the most recent leg of the market. How do I mean by the most recent leg? I'm trying to move closer to my computer so that in case the audio doesn't come out where you can hear me. The most recent leg of price. This is what I mean by the most recent leg of price. From this low to this high is the most recent leg of price. That is what we are paying attention to in this instance. So we are going to draw our Fibonacci from this level to this place. We are expecting a reaction, right? We are expecting a possible reaction. We are looking for a suitable place where we can take possible buys from. And if you've seen some of my videos on on how I use Fibonacci to enter trade, you understand why I picked this trade in this zone from 60 to 80%, having this strong Maribozu or institutional candle here as a confirmation. But if I was to enter this critically now, I want to enter like a trader. I don't just want to set and forget. I want to enter like a trader, like as if na my work be that. I will always wait for confirmation. And in the concepts of waiting for confirmation, that is where sweeps are very important. There are instances where price will just react from here and start going up, right? But what price did? Price rallied up, swept this recent level. Let me delete this because we do not need this. You understand why I put that there. Price swept this recent level, came down, don't mind the line, came down, right? Swept this other level that gave us the confirmation that okay, price wants to continue our buy. It now swept it. The concept of sweep is just like, let me just put it as weak interference. Anytime you see weak, maybe say you just too calm like this, you just tap bada, and you have a previous structure. I'm sorry for using those words, Jerry. I just finished eating now. Why idea? And we are seeing the previous structure, and price just touched it and reversed it. Like it didn't close with the body beneath it, it closed with the wick. That means it has swept this previous structure. Let me make it very clean. That swept this previous structure, right? That swept this previous structure. That is what we mean by sweep. Now this is the first level. If you were to enter from here, you will not just enter from here. Let's assume you've not even entered from here at all. You are just waiting for confirmation. This is the confirmation you needed. From here. You will now not even enter from here safe. You will still enter 1 hour again. You know, we've already established a sweep here. We've established one sweep here. You will enter 1 hour again. You will now wait for price to now break above that previous structure. You know that previous structure where give you your price to break above it. You can see it broke above it here too, but critically from this level, for price to break above it, the price has broken above it. And what are we expecting again? We're expecting the price cannot just continue going up. We're expecting a rally down. And where are we expecting a rally down from? We don't know, but we can predict or react to what price can do by drawing another Fibonacci. What did price do again that is not happening to look like happenstance again? It reacted from 60 to 80% from this demand level. It reacted from 60 to 80% from this demand level. Typical me, I can just decide to just put my entry here and just okay, let me just do this and targets blah blah blah. You can do that, but I want to just teach you the concept of sweeps. You understand? So that you can be able to add that to your arsenal. Now I have noticed this now. I can say, okay, oh, price don't touch my demand zone for this level. I will still wait again. Oh yeah, I dey wait for confirmation. Enter 15 minutes. 15 minutes, what happened here? Price touched it here. After price touched it here, what did price now do? Price went up, came down, swept this. You can see how these things, is making sense. Just like the way we saw it in 4 hours. How price came down, swept the previous mitigation candle that mitigated that other demand level. You can see that price is repeating the same thing here in 15 minutes. It touched it here at first, came back here, swept this, came to sweep this level again. You can see, came to sweep this level. So what are we going to do? We are now waiting for price. After this price now pushed up, formed a market structure shift here, a micro market structure shift there, blah blah blah. What are we waiting for? We're waiting for price to react from this level, this demand level. All right, we're waiting for price to react from this demand level. Maybe enter 5 minutes again. I shock you. Make I waiting. Make I shock you. Waiting price can't do again. We know we have a demand level here. Price has given us the first valid pullback, which is some people call it inducement and all of that. This right now, what the price do again? Price swept it again. Oh yeah. You see the concept of this sweep. Price swept it again. This is where price swept it. This is where price swept it. We will now mark this level. You can see that this thing has helped you to refine your entry. It has helped you so much in refining your entry. So because price has swept this candle is the one. Let me delete this so it will be neat. This candle is the one that price used in sweeping all of this. You will now mark your entry from there again. You know you already refined it. What are you looking for? If we enter like 1 minute or 3 minutes, we will still see another smaller sweeps that we can capitalize on. But this is the best. Let's not uh, let's not make it complicated than that. Put your stop loss. You can put your stop loss on it exactly safe like this, or beneath it a bit. But to maximize your kilo pay. So where are you targeting? Maybe your internal range liquidity can target this place. Internal range liquidity here, or wherever you want to target. Let's say you're just targeting this, targeting this. You can you can see what price give you. 1 to 15 RR. 1 to 15 RR. Trust me, if you try what I am saying and you try to backtest what I am saying, you will understand how you can get really high risk to reward without stressing. Although it will take time, you understand. You have to be active. You see the way I was checking 4 hours. From 4 hours, I rally down to 1 hour. For 1 hour, 30 minutes. For 30 minutes, 15 minutes, 5 minutes, and the likes. That is the time it will take you to do this. But most of the times, I do not have the time to do all of that. That's why I just trade my normal this pattern, this QML pattern, right? Just trade this my normal QML pattern because if I've just seen it, I will just execute once and for all and just leave the drama and focus on some other stuffs, right? So these are one of the kind of many kind of entries that I have. I know SMC entry, I know NCI entry, I know all these entry. I don't know what they call them, but I'm just trying to categorize them so that you can have an idea of what is going on. Do you understand? So this is 15 RR trade, and this can give you sweet money, sweet money. So I'll catch you guys later. It's been a while.